Hi there, I'm Doug. I make Canadian personal finance videos and review videos here on this YouTube channel. This is a long overdue update for December, January, and I guess a little bit of February, now that it's March, of my tax-free savings account. So I opened this tax-free savings account as a self-directed WealthSimple trade account in 2020 as a complete beginner. I don't claim to know what I'm doing. I've learned a lot along the way, and the portfolio has been doing well, along with everybody else that started investing at that time, because it was just a great time to jump in. Last year, 2022, wasn't so good. We lost money, and I'm going to show you that right now. If you look on the screen, so over the last year, down 3%. I mean, that includes the last couple months here, which haven't been super great. All right, so if you look here at the 1-year view, you can see that it's negative 3%, down almost above $1,500, almost $1,600, which is a lot. But you can see that the total amount, this is a lot more than what I had a year ago. A year ago, we were at 33,000, and that's thanks to the regular contributions that I've been making. Every paycheck, which is every 2 weeks for me, I've been depositing $700 in this account, and buying up stocks with the hope that in the next couple of years, these stocks will take off and their prices, their value will go up a lot. Also, dividends. I'm buying stocks that pay out dividends. That's the focus of this portfolio for me. It may not be everybody's strategy, but that's something that I'm looking for, is dividends, and dividends that are going to grow. So I'm looking for dividend aristocrats. I'll talk a little bit more about that when we look at the dividends themselves, and I'll point out some of those stocks to you. You can see that the value's gone up by about $20,000 over the last year, which is fantastic, but could be way better, right? If the market performed like it did in 2021, which was a really good year. If we look at the all-time view, still up almost 25%, $10,000. And just as an example, I'm going to look back and show you the video that I did 2 months ago. When exactly was that? December 13th. So it's more than 2 months ago. And the value of the account then was $46,479. And looking at the all-time, we were up 22%, 8,356. And just over, let's see, the last month, February, you can see not a great month, down 2%. But I have faith that things are going to turn around. This recent dip that we've seen, it was actually quite a drastic dip where I was down like $1,000 each day for like 2 consecutive days or 3 consecutive days. And I think that had to do with the nuclear stuff that's going on with Russia and the US. I guess it sparked fear in traders, and the prices of things went down. As I mentioned, this is dividend focused, so let's look at my dividend tracking sheet by month. So for the whole year of 2022, we ended up with $1,730.17. I'm happy about that. That's about $500 more than what we made in dividends in 2021. If you look at December was an all right month, $171.65 in dividends. January, all-time record, $292.05. And comparing that to the January of the previous year, $138.24, we've really jumped up. And before January 2023, our highest month was October, which was $212.24. So I'm really trying to set the bar a little bit higher for this coming year, 2023. So at the beginning of 2022, I set a goal. I wanted to get $200 a month in dividend income, and it happened one of the months, but that wasn't, it's like, being honest, that wasn't what I meant when I set that goal. I really meant I wanted to see it multiple months, but it seems like 2023, we're gonna get in the 200s pretty consistently, but I wanna see if I can get it above 300 at least 1 month. Another goal, or another change, I guess, for the account for 2023 is I was contributing $700 every 2 weeks in the last year. This year, I've bumped that up by $100, so $800 a month. I'm sorry, not a month, every 2 weeks. I pointed this out in my last video. I haven't updated this pie chart yet. It's a manual thing that I have to go through and update, so I'll do that for the next update video. But somebody had made comments that I was focused only on real estate and finance, but I just made this pie chart to show you this is how my portfolio is actually distributed. So the ETFs, there are a lot of the S&P 500, which is tech heavy, I believe. So you can see here, I have retail, which is a pretty big chunk. Telecom, another big chunk. Manufacturing, oil and gas, all this, and that's more than half. And then we have the other half, which is finance and real estate. So I am trying to beef up the telecom sector, and I think I'm going to put more in the manufacturing sector and construction too. That's a new one actually that I've been putting money into. I'm going to go back over to the TFSA in the browser and show you guys using the filters here the dividends that have been coming in, just to point out which ones have been big ones. I'm going to jump back because we're giving you an update here for December and January, and I guess February now. So you can see that Enbridge was a big one in December. Another big one, HYLD, that's a covered call ETF. Another one here, Russell Metals, 1444. All right, there we had Russell Metals. We have Smart Centers, which is that reliable real estate investment trust, $24.36 a month. Pembina, TNT, that's another real estate investment trust, $10.94. It's actually at a really low price right now. I should be buying more of this. Looking ahead to January, we have TELUS, that was a big one. Now, ex-US, this is another big one. This is an ETF that follows the S&P 500, and it only pays out twice a year. So a bigger payout for January for that. And the yield is really only like 1% or less. HYLD again, Northwest Health, that's almost $10. That's a real estate investment trust. Let's look here. Smart Centers was a big one. TNT. We had some bank payouts. Scotiabank, of course, was a huge contributor to that $2.92 with $92.70, and CIBC $11.90. February, another bank, National Bank, $8 there almost. Power Corp, $16.34. Cogeco, so remember when I said that this was something that I wanted to expand into, was telecom. Well, there you've got Cogeco, $10.86, and Cogeco is a dividend aristocrat. To be a dividend aristocrat, I think in the last 5 years you have had to raise your dividend and not have any cuts to your dividend payouts. I'm not too sure about the criteria. Don't take my word for that. Google it. $25 for Smart Centers in February. Northwest Health. So those real estate investment trusts. Oh, and then there's BMO, $42.90. So February, I haven't tallied that up yet, but that should be a good month too. All right, now that we've looked at our dividends, let's look at what I bought recently, where I've been putting the money that I've been contributing. So in December, what was I buying? I bought some ex-US. Let's look at the big ones here. Scotiabank, a few shares of that. QBR.B, that is Quebecor, which is another telecom company. They also produce content. They own Videotron in Quebec, which is a huge provider for like mobile services, but also home internet and cable. CCA, that's Cogeco, another telecom that provides home internet. And they own some cable companies in the US. Breezeways, I think, is one that they recently bought. Some more Quebecor there, more Cogeco, more ex-US, Scotiabank, Smart Centers, just these ones that I've kind of been sticking to. Now, Cash is an ETF that I don't know too much about. My brother told me to buy this. He said it's pretty stable. And if you look at the stock price, which it's an ETF. If you look at the fund price, it sticks around $50. It'll go up maybe 15 cents and then it'll go back down to $50. And what it does is track the high interest savings accounts rates in Canada. And right now the payout is like 5%, which is great. So I've put some money in there, and you don't really risk losing money because the stock price just stays the same. It's $50. CIBC. So just trying to, because in the beginning I was really just putting all my money into Scotiabank, but I'm trying to spread that out among all the big banks. CIBC is one, and BMO is another one. Maybe I should be buying Royal Bank too, and National Bank. I have some of that. Looking at what I bought just recently in February, some more Kojiko, some more of that cash ETF, more of QBR. And at the end of February, the price really went down just yesterday no, not yesterday, the day before yesterday. The price really sank for Scotiabank because they did not meet their targets. So stock price dropped. I was like, this is a good opportunity to buy some more. So that's what I did. And just recently kind of spending the rest of the money that I had from my most recent transfer of $800. All right, guys, that's going to be it for this video. I'll be posting more regularly in 2023. That's a resolution. Another goal that I'm setting for myself for 2023 is I want to see this TFSA exceed 75,000 by the end of the year. Let's see if we can get there. I'm going to do those consistent $800 every 2 weeks deposits, but also if I do some overtime at work, if I get a little bit of extra birthday money or something like that, I'm going to put it in the account and see how much we can grow this. I'm a far way away from maxing out my TFSA. It won't happen in 2023, but 2024 it might happen, because if you just look at the chart here since when I started investing, you can see that overall I've contributed like $42,000, but the overall contribution room that I get is like 88,600, so I can still put in another 40,000, a little more than 40,000. So lots of space there still. And then after that, the plan, I guess, is just to open up some personal trading accounts, some non-registered ones. Thanks for watching. If you're still here, give me a big like, hit subscribe, and the notification bell if you want to see when the next infrequent video comes up. But yeah, thanks for watching. Bye.